All right, hello. Good day from New York, Geneva, and wherever else we might be today. Greeting you from the UN Pension Fund. Thank you for being here. I see we have 150 attendees or so. I'm here with my colleague Denise Gaston-Gardella and Masata, another expert from the UN Pension Fund, as well as our colleagues from OICT who support us for the webinar. So the purpose of today's session is to answer questions you may have with pension. So the purpose is for you as participants in the fund, those who are staff and paying contributions to the fund, to have a forum to ask questions about pension, about your future entitlements, whatever it might be, and hopefully we can help address questions you have. As communicated in the broadcast, this is not an option for all aspects participation, but it really will guide, and based on your questions, we will hopefully give you answers and help you understand. So we're going to open the chat now. The Q&A, which I'm sure you're familiar with, where you can post your questions. And in the first half hour, and basically, Denise and I will swap. I will moderate, Denise will answer questions, and so on. We will also have presence from a colleague from our data analytics unit, our actuary in the fund, should there be questions about topics that are more of that nature. We, Denise and I, both work in the client services team and have been long-term pension experts in the UN Pension Fund and are very used to addressing questions about benefits, participation, and so on. If there's a large volume coming in, these will probably exceed what we can answer in a foreseeable time within this session. We will probably ask to close the chat so that we can get through the questions, and then if time is left, open it again if you have more questions. So don't be surprised if at some point we may have to choose to close it. For now, I see we have already 5 coming in, so we'll monitor, and depending on how it is going, we will possibly close it as we go, so that we can, of course, address as many of the questions that you may have. Another point I would like to highlight is, just in case, you might already be familiar, and I hope so, with the pension fund's member self-service, MSS. If you have used it in the past and not recently, then possibly you
Okay. Hi, everyone. I think we have a little issue with Christine's sound, so she's probably going to have to switch her connection. In the meantime, I see some of the questions already coming in, and one of them, which I posted without the answer, is, will this be recorded? And yes, this session is being recorded. You'll be able to access it on our YouTube channel, where we have recordings of all of our town halls. And I'll provide a link to that in a few moments. Then there was another question. Christine, if you can hear me, I can read it to you so you could address it. Are you connected?
Yes.
Okay,
Do you hear
great.
me?
Yes, now I hear you well. Okay, so the question has to do with member self-service. And I think you were just explaining how there will be a re-registration necessary to access member self-service. So now this question is, what should I do if I accidentally submit the wrong document through member self-service? And the second part is, how can I confirm whether my submitted document was accepted?
Great question. Thank you for that, because it's very practical and we like that. So I hope this works. I'm very sorry. I did get kicked out, so I hope you hear me well. I switched off my camera. Okay, great. So I'm going to share my screen. And first question was, if you submit the wrong document. So if you know that the document you were supposed to submit in member self-service was supposed to be a different one, then no problem. Just go back into member self-service and upload the correct document. The one that was erroneously or wrongly submitted will then be ignored because it will be superseded by the later uploaded, hopefully correct document. So just go back to member self-service, document upload, and upload. So I'm going to share my screen. One moment. And what you will see, hopefully.
We see it now.
All right. So we are on the homepage. And what you see here in yellow is the update about multi-factor authentication. So if you haven't done so yet, in order to access or re-access member self-service, you have to go through the steps of setting up multi-factor authentication. You will be required to provide an email address. And even if you have done that in the past, you have to again provide an email address, and it has to be a personal email address. The fund will no longer accept the UN or other work email address that have a UN entity name. It has to be a personal email address. That is a new requirement. We can have all thoughts about that, but the fact is it is a requirement. So you'll have to provide a personal email. You will also have to answer a security question. And if you have used MSS in the past, you know that there was a set of quite convoluted security questions you had to answer, like who was your first grade teacher in primary school or something like that. Those questions have disappeared. However, there are new security questions that will help the fund or the system identify you as being authorized to access member self-service. So it could be a question of, what is your current member organization, like your employing organization? Or it could be, for someone who separated, it could be, what was your last employing organization, and so on. So if you answer that question correctly, you should then be taken to the step of having to basically complete the setup for multi-factor authentication. And you will receive an email to the mailbox, to the email address that you provided in the first step. And once you have gone to your mailbox and opened that email and done what the email requests you to do, which is basically authenticate yourself, then it will take you to the next page where you then should be able to access member self-service by providing your email address and your password as you have set up as part of the process. So what I'm saying is you'll have to go through these stages. Once you have gone through these stages and you are going to access member self-service, the system will ask you if you want to make that connection a connection for the next 30 days, so that you don't have to go through the step of authenticating yourself through an email confirmation. And if you want to do that and you know that you are on a secure computer and you're using or accessing member self-service from the same computer most of the time, I personally have done that. And what will happen is when in the future you access UNJSPF member self-service, it will take you right into your account. So to the second part of your question, which was, can you please remind me, Denise? I'm so sorry. I can't hear you. I'm sorry.
The first part
Thank you.
was about how to check what they should do if they accidentally submit the wrong document.
Okay.
And the second part was, how can I confirm whether my submitted document was accepted, which I guess would be under the Proof Docs tab. Yeah.
Great. Thank you. So if you also want to know whether your submitted documents were successfully submitted. So if you're in member self-service, and I'm going into my own right now, here we go. Because I pre-completed mine and I said yes to the 30-day validity kind of thing, I'm going to click here on next. If ever you're new or you haven't used MSS in a long time or never before you can do that, you have to register. And you would do that by going here at the bottom of the page where there's a red box saying register or instructions. If you click on register, it will take you through the steps of registering for MFA. Right. But I'm not going to do that because I have registered. So I can't really take you through those steps right now. And I'm going to just show you what I wanted to show you. So again, if you are going to set up multi-factor authentication because you haven't done it yet, you go here to register and it will take you through the steps. Or if you are like me, you have done that, you have set up multi-factor authentication, then you can do what I do and go right into your account. All right, so I'm now in my account and I submitted documents in the past. So if I want to be sure whether the documents I've uploaded are actually in member self-service, I'm going here to MSS document upload. And instead of saying upload a document, I'm going to say outbox. The outbox is where all documents I ever submitted are stored. So you can see here, I submitted documents in the past as a test, so I can share this with people when we need to explain how it works. And for example, if I want to see, I don't know, the E7 form, not signed, whatever this is, I just click on this gray line, and then I click on whatever I want to see that I submitted during that submission. For example, I don't know, say the E7 form. So I click here and it will open it here on the side as a download. I can open the file and I see the form or document I submitted. Okay, so this is how it works. So you can, by going to Outbox and following the steps of clicking on whatever submission you want to check, you can then open the document and check. If it shows here in the Outbox, it means it has reached the pension fund. To know whether it was accepted, if it is an official form like a payment instruction form, indeed you can see that under Proof Documents. I can't demo that to you here because I haven't submitted payment instructions that were accepted by the fund because I'm not yet separating, right? But under Proof Documents, this is a tracking area where you could actually see whether relevant documents for certain pension relevant processes like separation were received and accepted. So you see here's a table basically where it will show you the document name, the received date, the accepted date, possibly rejection date if that's the case, and that's it. So once this table is populated with actual documents like payment instructions or other, you will see these fields populated if applicable. So if you don't see a received date, an accepted date, it was not yet reviewed and accepted by the relevant team in the fund. All right, I stop there. One last point on multi-factor authentication. When you come to the homepage of UNJSPF of the website, in this yellow box, you have key information and links to the relevant pages where you can find help if you need it. Under resources, or simply by clicking here on MSS page, you will see that you have an update on the fact that multi-factor authentication is now required. And by scrolling down, you have Q&A about issues that you could have with MFA or MSS. There's also a tutorial and video on how to register for MSS, which includes the multi-factor authentication steps. It's a short video and it would explain you step by step how to set up MFA. Once you have set up MFA successfully, that's it. Thereafter, you will only need to, from time to time, authenticate yourself via the email that you have provided. Over to you, Denise.
Thank you. So there's actually a third part to this person's question, but now we have 60 questions that have reached the inbox. So I've been trying to kind of search through and combine them. But let me, in all fairness, since this one's published, let's go over the third part of this person's question, which is not related to member self-service. So if an early retired employee is rehired and re-enrolled, what's the process for restoring benefits after separation from the new employer? So this sounds like they're receiving a pension, then they're re-employed, so the pension is suspended. And then when they separate again, they have their new benefit, which would then be paid plus the reinstatement of the prior benefit. So we need separation documents from the new or second employer in order to reinstate your first pension and to process your second benefit. I think that's okay. So just, yeah.
Maybe we can say one thing, which is if we go, yes, thank you so much. Here, under for clients. So I would say if you can, while we are in this town hall, if you can pull up the website of the UN Pension Fund, which is www.unjspf.org. It's quite straightforward. If you are on that website and you go to for clients, all topics, it would maybe be helpful if you can, as applicable to you and your questions, navigate a little bit with us when we show you web pages, so that you know there's actually a lot of helpful information on the website. And here, if we say re-employment, I just have to find the relevant page. There is an actual page on re-employment after retirement. Here it is. So this is a page for clients, all topics. And on this page, all the topic pages that take you to a dedicated web page are provided. So if I scroll down again, it's in alphabetical order, re-employment after retirement. So having retired early still means you have retired and you have separated from the UN Pension Fund and started to receive a benefit from the fund. So you are now a retiree, and therefore, if you were to be re-employed, then potentially you will rejoin the pension fund as a participant. And as Denise said, in that case, if you again become a fund participant who pays contributions to the fund, we would have to suspend your existing early retirement benefit for the duration of your new participation in the fund. But before we know this, we first have to assess what your re-employment situation actually is, because not everyone who is re-employed meets the requirements for the fund to be considered again a participant. So there are certain conditions that you need to meet in order to again become a fund participant, which are, do you have a 6 months or longer contract as a staff? It can be a contract of only 6 months, but it has to be at least 6 months and it has to be a staff contract. If that is the case, you will be again considered a participant in the fund. And because you cannot at the same time be a participant in the fund and receive a payment from the fund, a retirement payment, we will have to suspend your early retirement benefit while you're again participating in the fund and receiving a full salary from your employing organization. And as Denise explained, for the period of new participation, this is considered a separate new period of participation in the fund. And once you again separate, that new fund participation will yield a new benefit for you. Because you have already acquired a retirement benefit in the past, you don't need to have 5 years or more of contributory service under the new participation to be entitled to again an additional retirement benefit. So even if you contribute only for 2 years under the new participation, if you wish, you could elect another additional retirement benefit and get basically your early retirement benefit plus this other retirement benefit that would be whatever it is based on your contributory service. Or you could receive a one-time payout, a withdrawal settlement. But I think the key here is that you're starting a new participation and I should take it in steps. First, we have to determine whether you are actually again a participant in the fund. If so, then you are starting a new participation and you will earn a new benefit from the fund for that participation. And your existing early retirement benefit would be suspended for as long as you're again a participant in the fund. Once you again separate, your existing early retirement benefit will be reinstated and your new entitlement for the new period would be paid to you. But again, we need to receive payment instructions from you, and we again need to receive the relevant separation documents from your employing organization. Now, for all of this and more information, you have this webpage, and I would suggest you really take a little bit of time to read through all of this, including the FAQs, so that hopefully you have a more solidified understanding of what would it mean. Back to Denise.
Thank you, Christine. I posted a couple questions which were related to the one that you were just answering. So if you move from staff to non-staff position, can I pay into my pension? And Christine, you had just mentioned that you have to have a staff position to be eligible to participate in the fund. And another question was, can I restart my pension if I rejoin after my position has been eliminated? I'm only 1 year away from early retirement. And I believe you said when you rejoin, even if it's for maybe just 2 years, you'll still have an option of a second benefit of some type. So, and you mentioned the eligibility requirements upon re-entry. So I think you've answered them, but if you wanted to add anything.
I'm thinking maybe we should talk a bit about break in service, because depending on, I don't know, for this question that you just mentioned, the person who has to separate or is separating in the near future, 1 year before reaching early retirement, and who is maybe hoping to rejoin the UN system in a staff capacity, if you do that within 3 years from having separated, 36 months from having separated, and if no benefit was paid to you yet at the time of rejoining, then indeed you can continue adding to your existing acquired pension rights and add on during a new period of participation in the future to what you already acquired. And then when you again separate from service based on your age at that separation date and based on the length of your contributory service at that future separation date, we would then determine what your entitlements are and your benefit amount. So if, let's say, you are today 54, you have to separate, you find again a job at 55, and you continue adding to your existing acquired pension rights. So you didn't request payment of a benefit when you separated, but you opted to avail of what we call the deferment option, the option to kind of freeze your holdings in the fund and see if you can rejoin the fund within 36 months from separation. And if that is the case, then if you rejoin the fund within those 36 months from your last separation date, because you didn't receive a payout from us and you didn't make a benefit election, we would then consider that once you rejoin the fund, you're continuing your participation. The period of break in service will be that, so you can't make that pensionable. You can't pay voluntary contributions for a period when you are not an active staff member. But as soon as you rejoin and again become a participant, you can then add that new contributory service period to your existing one. And again, as I said, once you again separate, we would then determine your entitlements based on the total contributory service of period 1 plus period 2, and based on your age at separation. So if your early retirement age was 55 and your normal retirement age 62, and you were fitting into the scenario that I just described, by opting for this deferment of choice, you could actually connect 2 periods. However, if the break in between 2 periods exceeds 36 months, then you end 1 period of participation and you have to make a benefit election for that period. And you start a new period of participation when you again join the fund more than 36 months since your last separation date. Or if you separate and request the payment of a benefit, then again, because we started paying you a benefit or we paid you a withdrawal settlement, if you rejoin in the future, that means you start a new period of participation. You may have options to connect the 2 periods. We have something called restoration, and you have to contact the fund as soon as possible after rejoining. But there are options that you could consider whether they are beneficial to you. Information about all of this is on our website. Again, same page here under for clients, go to all topics, scroll down, break in service. On this page, you will see a number or like some, I hope, useful information about what I just explained, but also you could look at something like restoration, which is about connecting 2 periods of contributory service where you have 2 separate periods of participation in the fund. I know this is a lot of information, but I would say look at these at the website, look at break in service, look at restoration, and in your case, also look at the deferment of choice option, which is under benefit options. I'm going to open that page. Here under benefit options, one of the options at the bottom here says delaying election of benefit or payout under Article 32. There we explain that you have this option to not receive a payment if you can afford that, but to wait and see whether within 36 months from your separation, you're rejoining the fund. Okay, so I'll hand back to Denise for the next question.
Thank you. We have a couple of additional questions that I posted that I think are related about how long can I defer my pension after leaving? And you mentioned 36 months. What's the process for delaying election of benefit or payout? Again, up to 36 months. And that is maybe something you want to show about the forms and the first page of the payment instruction form.
Yes, that's a great idea. So let me go to forms here. So as Denise said, so if we're speaking specifically about the deferment option, delaying the election of your benefit or payout, right? So this option to not receive a payout, to not make a benefit election, and why would you delay? It's because you have a plan or an expectation or a hope that you will rejoin the UN Pension Fund again as an active participant within 36 months from separation. So it basically means you can afford to not start receiving a benefit immediately after separation. So if that is your case, then this delaying election or Article 32 deferment of choice option is a good option to consider. It's different than what we call the deferred retirement benefit. And I'm not going to talk right now about the deferred retirement benefit to not confuse you. But I just want to highlight that the delaying election is different than the deferred retirement benefit election, where you're actually electing a kind of retirement benefit. Here, we are talking about this deferment choice, which is deferring or delaying your benefit election or payout. So as Denise said, let's have a look at the form that you would have to submit. So what is the process to opt for this delaying? Okay. Oh, sorry, separating here. So if you go to forms, and ideally, let me preface this with the fact that you can access all forms of the UN Pension Fund on our website here under resources and then forms. However, please don't use these forms. Please use the form version that is available inside your member self-service. I'm not sure if I'm still in my member self-service. If not, I want to show you inside my member self-service right now. Okay, once you're inside your own member self-service of the pension fund, if you go under e-forms, here you have all the official pension fund forms in English and in French version. Why do I ask you to please use these forms? Because they are pre-completed with your name and with your pension fund reference number. And I'm going to pull up these forms. So you have two payment instruction forms. Payment ins, that stands for payment instructions. I'm sorry, it's not fully spelled out. We should really change that. But this is payment instructions for those who have less than 5 years of contributory service at the time of separation. And then you have E7, which is the form of payment instructions for those with 5 years or more of contributory service in the fund at the time of separation. So depending on the length of your contributory service when you separate, you will have to complete either form E6 or E7. I will open form E7, which is the form for those with 5 or more years of contributory service at the time of separation. I'm inside my member self-service and I'm opening the English version of this form. So I'm opening it now, and you will see in a moment, voila, the form. So what you see here are pages 1, 2, and 3 of the form. Now, okay, what you also see is a barcode. Barcodes are great because they help us make sure that when we get your form, based on the barcode, when we scan it to the system, it's immediately recognized as your form of this kind and will update not only the form to your file, but also create the relevant workflow for benefit processing. It's automated and it's very helpful. The other part is it already includes your unique ID number. So that's helpful too, obviously. And it includes already pre-completed with your name as recorded in the pension funds system. So that's why I say, please use the form that is available on the funds inside your member self-service, because it will be personalized to your specific case. And then you have for this E7 form, you have pages 1, 2, and 3. On page 1, you have this option to elect the deferment choice, the option to say, I don't want to get payment, I don't want to make a benefit election, I want to delay this choice until I'm ready to make it for up to maximum 3 years, 36 months from separation. And if that is what you want, you do not want to make an election and you don't want to get paid, then on page 1 of this form, you will enter the relevant details and date and sign only this page. And only this page then needs to be submitted to the UN Pension Fund. You can submit it via member self-service using the document upload function. So you have to complete these fields and you date it, and then you print out the form and hand sign it, because the fund does not accept electronic signatures. And then you can scan it and upload it back to the fund using the document upload feature. Okay, so this is page 1 to be used if you say, I do not want to make a benefit election at this time, but I want to defer that choice and I want to not receive a payment at this time because I want to have up to 36 months from separation to do so. If, however, you say, I want to be paid as soon as possible, or I'm ready to make a final decision as to which benefit, then you have to complete pages 2 and 3. On page 2, you provide your benefit election. Depending on what is your case, you choose which retirement benefit you are entitled to if you want one, or if you want a withdrawal settlement. So you have to, of course, be aware of your benefit options and choose one that you're actually entitled to. And then date and hand sign this page. And then on the last page, you provide your payment instructions. You're telling us where you want to be paid in which currency. Provide your address, your email address, and a phone number where we can reach you. Date and hand sign this page. So, final note, if you want to elect the delaying option, you only submit page 1 of this form together with a copy of a valid ID document, ideally passport if you have, and with, I guess, we don't need banking RIP yet, so just with copy of a valid passport. And then once you either rejoin the fund within 36 months, we simply continue your participation. Or if within 36 months you are not rejoining the fund, make sure you submit your actual benefit election and payment information at the latest before the 36 months are up. So at the latest, I would say, send us a dated and duly completed pages 2 and 3, or page 2 only if it's E6 form, to the fund before the 36 months of deferment have expired. Back to Denise. And Denise, I don't know if you want to take over and we swap as you wish.
Yeah, thank you. I think so. I mean, I've seen a number of questions that I think I can group together, and then I could just answer them if you want to. Yes. Publish them after I've answered. There are questions that are related to member self-service problems, and then there are a number of questions about how long do I need to wait to get a reply on something, and how long do I normally need to wait before I get my first payment? Mm-hmm. So I can answer those questions.
Yep.
Oh yeah?
Great.
Okay. Yep. So MSS issues. As we just have a new re-registration requirement, some of you are probably having some difficulties re-registering with member self-service or registering for the first time now that you need to use multi-factor authentication. If you have a problem and you need help, we have a dedicated service. Here, Christine's now bringing it up, member self-service. We have an email address that you can write to, msssupport@unjspf.org, or you can use the contact form, which is for any type of question, and then just choose the service is related to login. So either directly by email to msssupport@unjspf.org, or through the form, the Contact Us form, which Christine is showing now on the screen. And there is a topic called, I'm trying to get closer, one of the fund's online services or applications, for example, UNJSPF member self-service. It's down about 4 more bullet points. And that would be for anything related to member self-service, user support, you could check that particular field. So please do reach out so we can help you. Then, if if you forget the links, just go to our website under Contact Us or under the Member Self-Service page. And then you'll see the different ways to reach us about member self-service support. Okay, the other questions which came in were, let's say somebody says, how long does it take before I can get an answer to my question? If you've reached out to us through the contact form, we do our best to answer, but we have so many queries that come in. I'm sure in many cases we're not going to answer you as quickly as you would like, because I myself would like to have an answer in the same hour or the same day. But for MSS support and request for unique ID, you should get an answer very quickly, because those are specific technical things that can be addressed. If you send us a query about something about your own case, it will require us many times to go into your file, to review your employment history, to review any other features that might be related to your query. So it can take us some time to review your case before we can give you an answer. Our benchmark is 15 days, 15 business days. We try to answer sooner than that, but that is what we say is you'll get a reply for most queries within 15 business days. Now, to the question about when can I expect my first payment, I think there were a few about different types. If you choose a withdrawal settlement, which is a one-time payment, or if you chose to get some type of monthly benefit, an early retirement benefit or a retirement benefit. Somebody said they've heard that it can take a couple of months. Okay, so there is an entire page and resource material dedicated to the separation process, so that you understand what the steps are leading up to you getting your first payment. Christine was showing you the payment instruction form, which is one of the main documents that we need from you, the participant, along with the supporting documents, like your ID, bank document, possibly marriage certificate, etc. We need all those documents from you before we can start to process your benefit. From your employer, we need a separation document related to your human resources material, or your executive office or your human resources office, and from your payroll office. So without these separation documents, we can't start processing your benefit. And the checklist here on the screen will give you some idea of the documents that you'll need to submit and your employer needs to submit. We also talked about the Proof Documents tab, where you can see when the fund has received certain documents, especially these separation documents. If you look in your member self-service account, under the Proof Documents tab, and you see that we have received your separation documents, if it's empty like this, that means we haven't received them. And then you know we can't be processing your benefit yet. But once you've separated, this should get populated with payment instruction form and then a date of receipt and acceptance, and the same for the other separation documents. Then in more than 90% of the cases, your benefit will be processed within 15 business days of receipt of all of the separation documents, unless there's some kind of discrepancy in the data, which would require us to either contact you and or your employer to clear up the discrepancy. If there's no discrepancy, or once that discrepancy has been resolved, your pension would be processed within 15 days. That still means, that doesn't mean that you'll get the payment exactly in 15 days, because we have a payroll cycle every month. The processing has to take place before a specific deadline, which is shortly before the middle of the month, in order for that to reach that month's payroll, which is paid at the end of the calendar month. So let's say you separated at the end of August. We got all the separation documents together. The last one, everything cleared up, everything was good. On the 20th of September, that's less than a month after you separated, so that's pretty quick. But because it was the 20th of September, it's too late for the September payroll. So it would go into the October payroll. Now, in between, you would get your retroactive payment, or if you also took a lump sum payment, you would get that. But your first monthly pension would only come probably at the end of October, at the soonest. So we have here on the screen the processing timeline, so you can understand what I've just tried to explain. And we have a video about the separation process, which I think is very helpful. In just less than 5 minutes, you can see the process of what we need from you and your employer. And then it will explain why there might be delays because of missing or incorrectly completed documents. Okay. So I think if I can remember one other question, I would say there were a couple about taxation. And we don't give taxation advice. There was, I think, one or two which were referring to United States citizens. So I know that United States citizens are taxed no matter where they live in the world. So if you receive a pension or a withdrawal settlement from the pension fund, even if you're not living in the United States, but you're an American citizen, you have to file your taxes. We have a page on taxation, mainly to say that we unfortunately can't give tax advice, but we do have some information about taxes for American citizens. And there's information as well, which we often refer to from the UN tax office itself. So I would recommend for those of you who are American citizens and you posed a question about taxation, please refer to this web page. And for all others, unfortunately, we don't have any specific information per country and are unable to have that knowledge and keep up with the tax laws in all the countries. So I'm sorry, I can't give any more detailed answer about taxes on pension. So Christine, if you have any others in the new questions that you want me to answer, if you see them.
I
have
mean,
51
many
questions. Yeah.
Yes. I'm just thinking what could be, because indeed there are a few that are about the same topics. So I was thinking, how about we go a little bit into the questions about death benefits? So for example, there is this question, in case of the death of a staff member, so someone who is active staff, what would be the entitlement? Are there any entitlements for survivors?
So a death in service.
Yes, a death in service.
So, okay, thank you. If you are an active participant, an active staff member, and you die in service, if you're married, and we do have information about which types of marriages the pension fund recognizes for survivors' benefits, if you're married, your spouse would be entitled to a surviving spouse's benefit. That is half of the amount of what your benefit would have been. And if you have any children under the age of 21, your child would be entitled to a child's benefit up until age 21. The child, it would be your natural child or an adopted child or a stepchild. And we do have mention here about disabled child's benefit. The benefit amount is the same as a child's benefit, but it's payable beyond age 21 if your child has been recognized as disabled by the fund. Okay, so that was the simple answer. I think
Maybe,
if you die
yeah.
in service.
I mean, I think maybe you could just go a little bit into, yes, it is in death in service. What I think might be helpful is also to know about, like, what is the level of the benefit for a surviving spouse, for example. So
yes,
would they
I mentioned
receive,
it would be half of what the staff member's benefit would have been.
So at retirement age or at the time of death?
Well, if
of
they're
the staff member,
it would be the staff member's benefit at retirement, because even if they're
right.
not yet retirement age, then if they die in service, the spouse is entitled to a surviving spouse's benefit.
Great. So basically, as if that deceased staff member who died in service had continued to pay contributions up to their normal retirement age. And then we would calculate in the fund 50% of that entitlement as a surviving spouse's benefit, right?
Right. And
yeah,
when you look at your estimates that you run in member self-service, if you're married, you will see the surviving spouse's benefit listed under your retirement benefit. And you can see that it's half of what your retirement benefit would be. So in the same logic, I guess you could say that the surviving spouse's benefit is half of what the staff member's benefit would be if they had indeed worked until age 60 or 62 or 65, whatever their retirement age is.
Thank you. So that's actually a very generous survivor's benefit, because we have indeed sadly cases where people pass away at quite young age, but at least, fortunately, the surviving spouse and children are entitled to survivor's benefits at that time, and it is calculated, as Denise explained, as if the staff had continued to pay contributions till their normal retirement age. There's also a really good video about survivor's benefits on our website. So I think anyone who's interested in survivor's benefits, it's worth watching this and also getting a good sense of what would be required from the fund to determine entitlement and then start the process of course, putting this in place. And we actually had a similar question, but for a retiree. So the question was, what if in retirement I pass away? Basically, who would get a benefit and what would my surviving spouse receive, and when would she start or he start receiving the survivor's benefit?
Okay. So if you're already in receipt of a retirement benefit, I think that was this question. So you're not a staff member anymore, but you are entitled to a retirement benefit. So you've chosen some form of retirement benefit. If you've chosen a withdrawal settlement, you have no survivor's benefits payable. So that's one thing to keep in mind. The one-time withdrawal settlement doesn't have any survivor's benefits attached to it. But if you choose or are entitled to a a retirement benefit. So let's say you chose a deferred retirement benefit, because we do get this question a lot. Or if you are already in receipt of a retirement benefit and you die, your spouse that you were married to, as long as you were married to them at separation from service and continued to be married to them until death, they would be entitled to a surviving spouse's benefit. It's payable from the first month after your death. So your pension is paid until the end of the month in which you die, and then the surviving spouse's benefit is payable from the first of the following month. And again, it's half of what your pension had been. We can get into a lot more scenarios about this, though, because there's like, what if I don't have a spouse? Or, yeah, I don't know if we want to take that much time to go into all those different scenarios, but
maybe not at this time.
Yeah.
But I think you covered the essentials. And again, I think start with the website, because again, we do provide a lot of information and resources. And under this page here, again, if we go to all topics, and then here scrolling down, you come to the death, click there, and it will take you to this page where general information is provided, and then you can link to what are the different kinds of survivors benefits and frequently asked questions relating to this topic. And I think that will already give you a lot of information. And if you have, of course, always, if you have questions after this session, and it's very likely, feel free, please contact us via the official channels provided on our Contact Us page, the one we showed you, I think, earlier. And we will, of course, review your question in the context of your specific pension fund profile and the information we have on file for you, and we will provide you with the information that is relevant to you and specifically to your case. Thank you for your patience. As Denise said, we get thousands of queries every week, and we have a very small team, but we do our best, of course, to respond in a timely manner. And the sooner you write to us, and hopefully the less urgent it is, the better, because then you have information and you can follow up if you have more questions, or simply, of course, hopefully we address your question. So therefore, I think for now, maybe we move on to a different topic, if that's okay, Denise. And I saw a question that maybe we can take now, which was, if I request for a withdrawal settlement, how much time will it take for me to receive that payment? I know you already answered it under a different question, but I think there are quite a few questions around how much time will it take for my benefit to come into payment. So if you don't mind repeating one more time, what are the essential steps, what we need to receive, and then what is the standard processing time in the fund? I think that would be helpful. And I will go in parallel on the page that you mentioned, the separation page, which is here under all topics, separation. And that is, as Denise said, a very good page to provide you with really all the information. Back to you, Denise.
Okay, so I did mention the timeline for both withdrawal and pension benefit, but to focus specifically on the withdrawal settlement, which is a one-time payment of your contributions and interest. You have the same requirements to submit a payment instruction form with a bank document and your ID document. And we need the 2 separation documents from your employer. So I mentioned that you can check the fund's receipt of those separation documents by looking in your member self-service account under the Proof Documents tab. And once we have all of those documents, and there's no issue with any of the data, so assuming you filled in your payment instruction form correctly, there's no discrepancy between your ID document date of birth and what your Human Resources Office has conveyed to us as your date of birth, for example. Those kinds of things would have to be reconciled before we would process a benefit. But assuming that there is no discrepancy, then your withdrawal settlement would be calculated within 15 business days of receipt of the full package of separation documents. And for that type of payment, we make these payments once a week. So if your benefit is calculated, it's released for payment. Usually it's a Thursday value date from the bank. And then it might take a couple of days to get to your bank account, depending on which bank you use. So I think you could pretty much say 15 business days for processing and an additional week for it to reach your bank account.
Great. Thank you so much. How do you want to proceed? Do you want me to take to answer some questions, or do you want to take more questions? As you prefer.
I can ask you some questions, but if I can just quickly address a couple that were there for a while.
Great.
Somebody asked about interest on their contributions. So we had talked about leaving your decision or your payment for up to 36 months. But be aware that there's no interest that accrues beyond your separation date. So even if you leave your money there for up to 36 months, it's not going to accrue any additional interest after you separate from service. So I think that was one question there. And another was about, will my benefit be adjusted, or will I just continue to get the same amount for my whole retirement? So maybe you want to answer that about the cost of living adjustments, or I can, however you like. Since we're going to swap over. Okay, I'll finish.
Go ahead.
And then we'll swap again. So,
sure.
So when you retire, your benefit is by default in US dollars. It's calculated in US dollars. We're a dollar-based fund. And your benefit is adjusted based on the consumer price index of the United States. This is the default. So every April, you will have an adjustment to your benefit if there's at least a 2% increase in the CPI, in the consumer price index, from the previous adjustment. And so we have a page on cost of living adjustment, which explains it in much more detail. So just to say, you run estimates, you see a benefit amount that you're going to get when you retire. When you retire, we calculate your benefit, and then you're paid your first amount. By the time April rolls around of the following year, you probably will get an adjustment, because most years we have adjustments, but it will, as I said, depend on how much the consumer price index has moved. And so your benefit is adjusted for cost of living. And only if there's an extreme jump of at least 10% will it be adjusted a second time in the year in October. I think that's the easiest answer. We won't go into the two-track now, but there is a system that you can choose as a retiree, which is to follow the consumer price index of your country of residence. Say you're living outside of the United States and you want to protect your purchasing power and follow the consumer price index of that country. So you can choose to go on this two-track system where your benefit will be adjusted based on the consumer price index of your country of residence, and it's compared with the dollar value in that same adjustment system that I just explained. And then you will be guaranteed a certain minimum, but also with a cap, so that you won't have great fluctuations in your benefit amount. So I said we're a dollar-based system. By default, we follow the Consumer Price Index of the United States. You can receive your pension in a different currency, which means it will have an exchange rate applied. And then as a way to protect from great fluctuations, you can choose this optional 2-track system as a retiree. And that is an entire town hall that we give. So I won't go into too much detail on that at this point, but cost of living adjustments are applied to pension benefits, to all monthly benefits, if they have risen enough to warrant an adjustment. So survivors benefits, your own retirement benefit, or child's benefit, anything that's a monthly benefit can have the cost of living adjustment applied to it.
Great.
Okay.
Thank you so much. So if you want, I'm going to take a question and answer and let you have a look at the questions. I hope I moved most of those that you answered to published or dismissed, but I don't know if I moved all. So you know which topics we covered, I think. So I hope it's going to be clear. One question I just saw, and that's still kind of in the context of separating and how much time does it take to get benefits. There was a question about the documents that you have to submit versus the documents that your organization has to submit. So we are in the context of separation, and the question of the process of separation and the requirements by the fund. Denise covered it, but maybe just to answer specifically this question about who has to submit which documents, and should you go to your payroll and HR and collect the relevant documents from them that they need to submit to the fund? The answer is no, absolutely not. So your HR and your payroll office in your organization will be the ones sending the relevant forms from them to the fund. So what they have to do will be submitted by them to the fund. Now, the question whether you should submit your documents, the ones that Denise mentioned, the payment instruction form, and whatever else might be required from you at the time of separation. So here I'm on the page under For Clients, All Topics, and under All Topics, I selected Separation. So here, just as a reminder, there is a checklist that we created that might be useful, where you could actually print out this checklist to be fully aware of what you have to submit. And Denise went over all of that, so I won't, of course, repeat it. But just so you know, it kind of gives you a step-by-step guide what you should be doing in preparation of separation, that you should definitely have registered or re-registered for member self-service. You should have run at least one, if not several, estimates for a possible separation date. I mean, I ideally also have reviewed your annual pension statement just to make sure your personal data seems to be correct with the fund. Possibly attended a virtual pension town hall on the topic you're interested in. Or if you didn't have time to do that and attend one during the live sessions, all the recordings of all the town halls we provide are available on our website, and you can watch them in your own time. The related PowerPoint presentation is also available under the same basically link. So you would have access to this when you need it, and you can watch it. And I think it's containing all the information you need, specifically the one on separation. And then here is the checklist. Again, depending on your case, you may have to submit more or less documents. But whichever documents are required from you, in addition to your payment instructions, you have to make sure that you prepare them and collect them and have them ready. And then you can submit them. Now, different organizations have different processes in which they want their staff to submit their part of the separation documents for the pension fund. The agencies oftentimes want you to submit to them your part, your payment instructions plus supporting documents, so that they then, from HR or payroll or from their pension staff pension committee, submit everything together, your documents and the organizational documents, to the fund. Other organizations like the UN, many UN offices, prefer that you, the staff member, submit your part of the documents that are required directly to the fund. And ideally, you should do that via your member self-service. Or you could send them to the fund if you prefer that, or you can come if you're in New York or Geneva or Nairobi, Bangkok, you can come and visit our walk-in services and submit them in person. But you have to follow the instructions that you receive from your employing organization. And as far as I'm aware, all the employing organizations are very clear in their separation memo that they send to you. They usually tell you what you should be doing and how you should submit your pension documents to the fund. Whether, again, you should submit them directly via your member self-service, or whether you should submit them to your HR and they then transmit them to the fund. I would suggest follow those instructions. There's a reason, there's a certain process in place in your organization. So by following it, you make sure that the best process is followed in your organization. If your organization says you, Christine, submit them directly to the fund, then you go to your member self-service and use the document upload feature. And here is where, once you have filled out your payment instructions form and you have made sure to complete it, date it, and then print it out, hand sign it, you create a PDF of it, and then you upload it by clicking here on upload. And you can submit not just your payment instructions, but also all the supporting documents. And once you have uploaded all the documents here, you have done your part, and your employing organization will do their part to submit the payroll document and the separation personal action from HR directly to the fund. And as Denise said earlier, once we have received your payment instructions plus supporting documents, and we have received the documents from your organization, they will all show here under the Proof Documents page. Because I'm in my member self-service and I have been separated, as I said earlier, there's nothing to see here. But if you are someone who has separated and we have received those documents, you will see them here. So I hope that helps this question, or to address the question of who should submit what and how should you submit your documents. All right, Denise, I don't know what else.
Yeah, okay, so we're going to save the solvency question and the question about
yes.
Yeah, those we'll save those for later.
A bit later. Mm-hmm.
Yeah, the question that was, I think just generally, what can we tell people about how they know what their benefit options are and what they would, the amount they'll get? We have a question here about how is my benefit calculated, and what happens? What are my options? Can I continue contributing or withdraw when I separate from the UN system? So I think maybe if you could just point out where they can find more information about benefit options, again, reminding about estimates and the benefit. Yeah, so the material they have there. Thank you.
Yes, absolutely. And by the way, I'm sorry, I switched my camera off just because of that connection issue. So I hope you can hear me clearly. Yeah? Okay, great. All right. So information about your benefit options and then estimates. So again, I'm on the homepage of our website, and I've shown you many times now, if I go for clients and I go to all topics, I will see all the topics for which we have dedicated web pages. You could also just go and say, well, I'm in this category of someone who is currently participating in the fund. And then if I click here, I will see only the pages that are most relevant to someone who is an active participant in the fund. Maybe you just joined or you've been with the fund for a while, but you're not necessarily interested in separation-related information. Or you could be in this category of someone who is separating or retiring. So in that case, you can click here and it will take you to a page that highlights only the topic pages that are most relevant to someone who is about to separate or retire, and so on. All right, so either you go to all topics and you see all the pages, or you can go to these separate chapters to have a lesser or like a more reduced view of topic pages. Let me go to separating or retiring, just so you see how what that would look like. So here you see these are far less pages, right? So if I'm on this page, I have one of these pages called benefit options. And that's a great page because it is an overview of each of the main benefits provided by the fund to someone who is separating. What benefit you might be entitled to, of course, depends on two main factors, which are how many years have you contributed to the fund at the time of separation? And the other question, how old are you at the time of separation in case you are entitled to a form of retirement benefit, in which case your age will determine what kind of retirement benefit you can choose. So we are showing here all the options, but not all of them may be necessarily available to you. So if you're interested to know what is a withdrawal settlement, who is entitled, what does it look like, what does it contain? Well, it's explained here. If you are someone who at the time of separation is entitled to a form of retirement benefit because you have at least 5 years of contributory service, then the next step is to know what is your age at the time of separation and whether you have reached your normal retirement age when you separate or at least your early retirement age. And if you haven't, then you still have a retirement option, which could be a deferred retirement option, deferred retirement benefit. And then finally, that option that we discussed a while back, the delaying election of benefit or payout. So delaying your election of a benefit or a payout is this option under Article 32, where you could freeze your holdings and your acquired pension rights in the fund for up to 36 months. So this is the page where you find all this information about your benefit options. There's also a really good video. It's the longest video we have. It's just over 5 minutes. Usually our videos are much shorter, but this one, because it covers quite dense information, is a bit longer. It's worth your time, I think. And then we also have on this page something that I find very useful, which is this benefit eligibility chart and the benefit comparison chart. So I don't know if this is the benefit eligibility chart. That helps you determine what kind of benefit are you entitled to based on the length of your contributory service, or CS, and your age at the time of separation. So you identify what your situation is, and then you'll see which benefit options you may have. And then the other chart, I'm going to close this one, is the benefit comparison chart. So this chart is going to provide you detailed information about these main benefits. So let's say you can elect either an early retirement benefit or a deferred retirement benefit or a withdrawal settlement based on the fact that at the time of separation, you have more than 5 or more years of contributory service, and you have reached at least your early retirement age, 55 or 58, as in your case applicable. In that case, maybe you want to know, okay, but what's the difference between these different kinds of benefits? I would say take the time and read through these questions and answers for each of the benefit options you may have. Who is eligible? When does the benefit become payable? How and until when is it payable? Is it adjusted for cost of living over time and as of when? How is it calculated? Can I get a lump sum as part of my benefit? So a cash payment as part of the overall payment. Are there surviving spouses or children's benefits or others? Child's benefits? And what happens if I rejoin the pension fund after separation and after having started one of these benefits? So I think this table is actually excellent to answer most of the questions that we get in the fund about the different benefit options. So again, this is under the webpage benefit options. Now for the estimate. So I'm back in my member self-service. And as we said earlier, anyone separating, before you make a benefit election, make sure to run an estimate. I know a lot of people who run a lot of estimates over time because they want to, get a sense, have a sense of what if I were to go on early retirement, or if I have options, what is the amount payable under deferred versus early retirement benefit? Or is it better if I stay a bit longer, and so on and so forth. Now, the estimate you can run here in Member Self-Service under the Estimate tab that I'm highlighting right now. Right? So here is where you would run your estimate. I'm trying to make it a little, let me make it a little smaller so you see a bit more of the page. Yeah. So if I want to run an estimate, it's quite straightforward. You enter here in this field the proposed separation date. Let's say I have to separate on the 31st of December 2025. I'm entering that date. It should always be in the order of day, month, year. You can also, of course, use the calendar option here. And then I leave the second field empty for now. Why? Because for now, I don't want to enter a fixed lump sum amount. I just want to get the default estimate for the amount that I would be entitled to if I were to separate at this date. And then I hit Submit Request. I get the info. If I hit Submit, it will take a few minutes. So please don't refresh your screen in the meantime. It doesn't take a few minutes. It takes a few seconds. Most of the time. I've never seen it take a few minutes. I guess this is a very conservative alert, but wait till you see this notice. Estimate is completed. Please go to the Documents tab to review your estimate document. Once you have that on the top of the page, you now go up here to Documents, View Existing Documents. And now at the top here, I can see on the 21st of October, my estimate, SS stands for self-service, for me was prepared. I'm not going to share my estimate because that's a little bit private, but I would see under this estimate the amount or the benefit options I would have at this separation date of 31 December 2025 based on my length of contributory service and age at that date of separation. And then if one of my options is an early or a normal retirement benefit, and I have therefore the option to take part of my benefit as a lump sum, a cash payout, what we will see in the initial estimate is the maximum cash that I could receive as a lump sum. If then I want to say, okay, I don't want that much cash. I want to have a bit more as a monthly income and less lump sum cash or no lump sum. But if I want to have a specific lump sum amount, I go back, I put again the date of separation for the same date. And now, because I know I'm entitled to a lump sum and I don't want as much of a lump sum, but less, I enter a fixed lump sum amount. And now I run the estimate with a fixed lump sum amount for this same date. Again, the lump sum option is only available if you have an early or a full retirement entitlement under Articles 29 or 28. Otherwise, you would not have this lump sum option, and then there's no point in filling out this field. So that's what I would say about the estimate. And then you have as many estimates as you have run available here under View Existing Documents. If you had periods of special leave without pay or break in service during your participation in the fund, which many people have, make sure and check your annual pension statement to see whether this is included in your statement. Your annual pension statement is available here under Existing Documents, and you see here is the pension statement 2024. So if you go there, you would see under the statement if you had a period of non-contributory service, meaning during leave without pay and or break in service that you might have had as part of your participation. If you know you had periods like that, but you see nothing in your statement, it could very well be that it wasn't duly reported to the fund, and therefore your estimate would be overestimating. Definitely in those cases, reach out to the fund and ask about this kind of discrepancy so that we can check, let you know if there's some missing information, and also then work together to fix that with your organization and then get you a good estimate. Over to you, Denise.
Thank you. We have a few questions that are generally about survivors again. One is about the in the absence of a spouse or children under 21, could one of my children still be considered as a secondary dependent? Do you want to answer that one?
Sure.
Okay.
All right. So here we go to the residual settlement in just a moment. So the question is, in the absence of a entitled surviving spouse or children under the age of 21, so in the absence of anyone being entitled to regular monthly payments as a survivor from the fund, could you designate your children as entitled? And the answer is no. The fund can only pay benefits in line with the regulations and rules, and the regulations and rules do not allow for you or any of us to assign survivors' benefits to someone who is not entitled under the regulations and rules. Entitlement for children only exists until age 21. So survivors' benefits to children can only be paid if there is such entitlement with an early or normal retirement benefit, or if you died in service, and provided your child or children are still under the age of 21 at the time of death. Only if you had a child recognized as disabled at the time of your passing, either recognized by your employing organization if it's a death in service, or by the UN Pension Fund if it is a death in retirement. Only if you have a disabled child that is recognized as disabled by the UN Pension Fund would we pay a surviving child's benefit beyond age 21 and for as long as the disability lasts. So if there is a disabled child, of course, then we pay that disabled child's benefit to a surviving disabled child for as long as the child is entitled. And I would say in most cases, that's lifelong entitlements. Let's say there's a scenario where there is no entitled survivor entitled to a form of regular monthly survivors benefit payments from the fund. Then what happens? The fund has a duty to always determine as the last step before closing a file whether we have paid out the equivalent of your own contributions plus the interest you earned on your own contributions, either in the form of a benefit to you, the former participant, and or to entitled survivors who are entitled to regular survivors benefits. So we always check as a last check before we close a file whether there is an amount remaining of what you contributed to the fund and the interest you earned that could not be paid out to you or anyone entitled to a regular survivor's benefit by the fund. And if the answer is yes, there is such an amount, that is what we call a residual amount, a residual settlement, or the residual amount of your own contributions and interest. And that will become the so-called residual settlement. So here we have a whole page on the residual settlement, explaining what it is, how it is constituted. You can watch the video. Again, I think it's helpful to clarify this. So this residual settlement, again, is payable only if no survivor is entitled to a regular monthly survivor's benefit payment from the fund. In that case, it is payable only if at the time of your death, there is still a residual of your own contributions and interest that couldn't be paid out to you or an entitled survivor. And in that case, we check whether we have on file a so-called Form A2, which is the designation of recipient of a residual settlement. And that is a form that you should have completed as a participant when you joined the UN Pension Fund. Or if you haven't done it, you can do it now. You can go to your member self-service, download Form A2, complete it, date it, and hand sign it, and then upload it back to the fund. On that form, you can designate who should receive this residual settlement if ever it were to become payable. And in that case, if you want to complete this form, you can designate one person, you can designate 10 people, it's up to you. And if you wish, you can assign shares to each of the designated recipients of that residual settlement. We pay very few residual settlements because in most cases, at the time of death of our former participant, we have already paid out the equivalent of that person's own contributions and interest. Or in most cases also, there are actually entitled survivors receiving regular survivors' benefits from the fund. I'll stop here. I also see that Sarah has joined us, and maybe Denise, if you want to maybe highlight a couple of questions or the questions that we received around solvency or whatever it might be that is best answered by Sarah. So again, I'm reintroducing Sarah. Sarah is the chief of our data analytics unit and is the actuary in the fund, and obviously the best person to address these kinds of questions. Thank you, Sarah. And Denise, over to you.
Yeah, thank you. We have a couple of questions related to topics that I think you could answer, Sarah. And the other questions which are still pending, I probably could be simply answered. And if we have time after you answer your questions, we will answer them live. Otherwise, we could work on putting a quick answer in the chat or in the Q&A. Okay, so we have, I'll read out the two questions that I've spotted. In the unlikely event that the UN as an institution is dissolved, in case of World War III or US withdrawal from the UN, I suppose that means, what will happen to the pension fund and the members' contributions? So, and then the other one is about solvency. So I can read that as well. Yeah.
Would you like me to address that question first, Denise?
Do you want to do one at a time? Please.
Yeah, I'll just do this one first because it's probably easier. So hello, good morning, good afternoon, good evening to everyone on the call today. And as Christine said, I'm Chief of the Data Analysis Unit within UNJSPF, and I also have responsibility for managing a lot of the actuarial processes that we have within the fund, which also includes monitoring the solvency of the fund and ensuring that the fund can continue to pay your benefits essentially into perpetuity, actually. So I think in the very likely event that the UN actually ceases to exist tomorrow, This is actually a hypothetical scenario that we already model as part of monitoring the solvency on an ongoing basis. And every 2 years, when we conduct an actuarial valuation within the fund, which is about appraising the assets against the liabilities and making sure that we can continue to pay benefits into perpetuity, one of the things we have to do as part of that valuation is model that scenario where actually the UN ceases to exist and everybody separates tomorrow, and be able to confirm to the General Assembly that the fund is actually still solvent and still able to pay benefits in that situation. So that is a very, I say, hypothetical scenario that we already model. And recent actuarial valuations, what I'm saying, over the last few decades actually have confirmed that the fund would continue to be able to pay those benefits. So in that situation that's been described in the question, even if the UN ceases to exist, the fund itself would continue to pay benefits, because we've gathered contributions over decades, and that's been invested in in assets that are there to then support future benefits. That is something that we do look at as a very hypothetical scenario, though, and that's actually a regulatory requirement of our fund. Hey, Denise, do you want to give me the next question? Hopefully that's answered that question.
Thank you, Sarah. Okay, the next question, which was related. Just scrolling back just a second. Given recent developments concerning funding allocations and organizational restructuring, how may we assess the long-term solvency and security of the pension fund for both current and prospective beneficiaries?
So one of the things that we do as part of monitoring the solvency of our fund is we do look at the, I guess, future participants, and the way that we assess the ongoing solvency of the fund is we model it on the basis that the fund remains open and will continue to attract new participants. I guess the current situation within some of our member organisation means that we may not have as many participants in future coming into the fund, or in fact remaining within the fund. And again, those are scenarios that we do model as part of our actuarial valuation. We do model a scenario where we actually have a decline in participant numbers. And because the fund is actually, I was going to say, adequately funded, it's not overfunded, it's not underfunded, but it actually is a good balance. It does mean that actually, even if our participant numbers were to change considerably over the next few years as a result of changes in our member organisation where there may be less staff, the fund is actually still able to sustain both existing benefits from existing contributions and funds that have been built up over many years, but also for future participants joining, their own contributions will essentially fund their own benefits. So we actually have an adequate balance for the fund to continue to fund existing beneficiaries, but also future beneficiaries as well. And as I say, we do monitor those scenarios where we have a drop in participants, and that's something we do as business as usual. It's not necessarily specific to the current situation, albeit with the current situation, we are for the next actuarial valuation coming up next year going to be modelling some slightly more aggressive reductions in participants. But it's just to try and understand the sensitivities to our solvency. But there's currently no kind of cause for concern in terms of those future participant numbers.
Thank you. I do not see other questions in the Q&A related to solvency. Now, I think you've answered the two that were there. Thank you.
Great. Thank you so much, Sarah. Okay.
Okay.
We still have 20 minutes, right?
We do.
That's great.
Would you like to address? There's a few questions. People are asking when should I start submitting my documents? Say they know they'll separate, say at the end of January. Can they go ahead and submit their separation documents now, or should they wait until closer to their separation date?
Sure. All right. So back to the separation requirements and how to start preparing and so on. Let me reshare the website. And I am returning to a page that I think I've used quite a few times, which is the separation page. So I'm going to go to separating or retiring, and I'm going to separation. And here, again, remember we have the checklist, which I think is an excellent first step to make sure that you have taken the steps that are advised here to prepare for separation from a pension perspective. So once you have done that and you are clear on what you should do, you have run your estimate, you're clear on your benefit options, and you're ready to make a benefit election. We generally say, ideally, I don't think it makes much sense to start the process of submitting your documents that are required from you as a participant more than 3 months before you actually separate. Do you have to submit them 3 months before? No. You can submit your documents whenever you're ready, and even as close to the date of separation or even after separation. But of course, as long as we haven't received your documents, even if we receive your organization's documents, we can't proceed. So I would say if I were someone who separates and I want to receive a benefit as soon as possible after separation, I would go through the steps advised on this separation checklist. And then I would say no more than 3 months, or whenever I'm ready to make a definite benefit election or decision as to what I actually want from the fund, I would submit my payment instructions and my supporting documents as required from me at that time. Why do we say there's no point in doing it more than 3 months before? First, because the fund considers any payment instructions that are older than 12 months at the time of us processing your entitlement as outdated. And we would have to come back to you and ask, are you actually still sure you want this benefit election, and are your banking instructions still valid at this time? So, okay, 12 months is quite a time frame, but it can sometimes take some time before we receive all the required separation documents from your organization. And you just don't want to be in a situation where you have submitted your documents too early so that they would be outdated at the time of us processing your benefit. 3 months before seems a reasonable time frame to start this process. But again, I would probably be someone who submits them much closer to my separation date, when I'm absolutely sure I'm actually separating and I'm certain that I have done all the due diligence that I want to do as to determining what benefit option is best for me, whether I want a lump sum as part of a retirement benefit or not, if that's an option. Make sure I have time to get all my supporting documents together. Maybe I need to reach out to my town hall to get a birth certificate or a marriage certificate or whatever it might be. So start the process as soon as you know you're separating to make sure you know what you need and make sure you get all the information you need, and then submit the documents to the fund that you're responsible for not earlier than 3 months before separation. I hope this is helpful. Back to Denise.
Thank you. So yes, I think for those of you who asked questions about submitting the documents and how soon or how far in advance before separation, please do refer to your employer to see how they want you to submit them, if they want you to provide them to them and they collect them all and submit them together to the fund, or if you can upload through member self-service. Generally speaking, we don't accept a payment instruction form that's more than 1 year old. And given that the closer to your separation date you run your estimates, the more accurate it will be. It's better to not submit things, nearly a year in advance of your separation. And there's no need actually to do it that far in advance. I think a couple of months is sufficient. Okay, so we have some questions about, I think there's maybe some questions I could group together about working beyond your normal retirement age. So maybe not all the way to your mandatory age of separation, but beyond your normal retirement age. So
yeah.
The question is, just trying to find it again.
I think I saw it.
Yeah.
Yeah.
I might have published it by now.
Here we can. I don't know,
Yeah.
but I think we can maybe just highlight the difference between normal retirement age and mandatory age of separation.
Yeah.
So back to my favorite, I'm on the For Clients All Topics page. And at some point here under R, you have retirement ages. And that page actually provides some clarification about normal retirement age, early retirement age, both of these for pension purposes, and mandatory age of separation. And the key to understand here is that our mandatory age of separation, or MAS, is determined by our employing organization. That's the age up to which our organization allows us to work, provided, of course, our contract permits. So in all of our cases, I think we now have a mandatory age of separation of 65. That was changed, I can't remember the date, 2014 maybe, but it's 65. So we can work till 65 unless, of course, there are reasons that we have to separate. Our normal retirement age and our early retirement age are determined by the fund's regulations and rules, not by the staff regulations. So we, the pension fund, have a separate set of regulations and rules, and that determines what is someone's normal retirement age and what is someone's early retirement age. So the purpose of normal retirement age is to say at what age is someone entitled to a form of retirement benefit to which no reduction applies, a full retirement benefit. So the normal retirement benefit. And that age is determined by the date at which we joined the pension fund as a participant. Different people have different normal and early retirement ages because over time, these normal and early retirement ages have changed when we had a change in the plan design and the regulations and rules changed. So someone who joined the fund before 2014 has an early retirement age of 55. Anyone who joins the fund since 2014 has an early retirement age of 58, meaning you have to be at least your early retirement age and you have to have at least 5 years of contributory service at the time of separation to be entitled to a so-called early retirement benefit. Why is that an attractive benefit? Because it provides both regular monthly payments for life that will be adjusted for cost of living over time, and the option to take part of that benefit as a lump sum. So the early retirement is available only for those who have reached at the time of separation at least their early retirement age, and which your early retirement is will depend on when you joined the UN pension fund, before 2014 or since 2014.
And Christine, may I jump in just
course,
a second?
Because
we have a question that's related, and before we move on from the point. So about the early retirement age, if you don't work up until your early retirement age, but you have to separate earlier. This was another question of,
Yes.
if there's no bridging option offered by your employer to allow you to continue in being employed until age 55 or 58, as the case may be, then you have only one retirement benefit option, really, which is the deferred retirement benefit.
Great. Yes, absolutely. So to connect it maybe then to here to early retirement, let's take that moment and also look again at the benefit options page. Yeah. Again, just a reminder that here you have all the different benefit options explained one by one, including the deferred and the early retirement benefits. And remember, I showed you the comparison chart where you can see and compare what is a deferred and what is an early retirement benefit and who is entitled to which. So without going into the details here of the different benefit options, given that that will take a lot of time, and we have actually whole seminars dedicated to this, and I will show you in a moment where you can find those. But going back to the retirement ages, as Denise just said, so what happens if you are separating, you have 5 or more years of contributory service at the date of separation, but you're younger than your early retirement age. And just to reiterate what Denise said, then you can still elect a form of retirement benefit payable for life, but it would not be an early, it would be a so-called deferred retirement benefit. The difference between early and deferred retirement benefit are a few, but the main differences are that no lump sum option under deferred retirement, whereas yes, a lump sum option under early retirement. Another difference is that under early retirement benefit, your benefit will be payable following the date of your separation. It will take some time to put into place, but then we pay you retroactively back to your date of separation, versus the deferred retirement benefit can only be paid as of your early retirement age. So if you separate at age 47, you have to wait at least until age 55 or 58 before you start receiving the deferred retirement payments. And the nice thing about the deferred retirement benefit is that you can choose when you want that benefit to start into payment. You could say, I don't want to start at my early retirement age. I want to start at my normal retirement age. Why would you do that? So that you could avoid having a reduction factor for early retirement applied. Whereas the early retirement option, you have no choice. The benefit will start being payable following the date of separation with the applicable reduction factor for early retirement. So I think I stop there because otherwise it will become a briefing on benefit options.
Yeah.
But just to go back to normal retirement age, so your normal retirement age can be different from your mandatory age of separation. Some people have a normal retirement age of 65, which then is the same as their mandatory age of separation. That is when they joined the fund since 2014. A lot of our participants currently have a normal retirement age of 62 because they joined the fund between 1990 and end of 2013, in which case their normal retirement age is 62. That means even though your mandatory age of separation is 65, for as long as you have reached at least your early retirement, your normal retirement age at the date of separation, you are entitled to receive a normal retirement benefit without a reduction factor applicable. So we get the question quite often, what happens if I have to separate before I reach my mandatory age of separation, but I have reached my normal retirement age? The answer is, in that case, you are entitled to a normal retirement benefit based on the length of contributory service at the time of separation. And there is obviously no reduction. It's not considered early retirement, it's considered normal retirement. And you can separate on normal retirement anytime as of the moment that you have reached your normal retirement age. And if you want to continue working, and you can, and your contract continues beyond your normal retirement age, no problem, good for you. You will simply continue increasing your contributory service and generally your future payouts. Yeah, so I hope that helped clarify a little bit around this. When can I separate, mandatory age of separation, normal retirement age, and so on.
Yes, thank you. I have been looking at some of the remaining questions, and I think if I can just quickly answer a couple of them and then
Sure.
maybe give you the hard ones. No, I'm kidding.
You
so
can, but
we have.
are you going to also talk about where we can find the pension town halls on all the topics that we've covered? Or do you want me to do that later?
Yeah, you can do that in just, I guess, later when at the end.
Okay,
yeah?
perfect.
Where
Thank
this
you.
recording will also be linked.
Great.
Okay, thank you. So we had a couple questions about ASHI, after service health insurance, and we at the fund do not administer health insurance or after service health insurance, but I can just generally say that you need to be in receipt of some form of a monthly benefit to qualify for ASHI. So if you take a withdrawal settlement, ASHI will not be an option for you. The only real involvement we have with ASHI is that the pension fund will deduct your insurance premium that is determined by your insurance provider, not by us. So we don't know how it's calculated or when it's going to get adjusted, etc. So the amount is just given to the fund with your agreement that it will be deducted from your pension and paid to your insurance provider. And then there was another question about, can I be paid in a bank account that's a joint account with my spouse? Yes, your lump sum and or your monthly benefit can be paid into a bank account as long as it has your name on it. It can be a shared account, but it has to include your name. So that was that question. And there were a few questions again about, the agreed termination and what the options would be and about the agency's contribution. So this is another frequently asked question that we get about the organization's contributions versus our own contributions that was deducted from our salary. Maybe we could refer to the way how the fund works or about the fund. We have a short, very informative video to explain to you how the defined benefit plan that we have doesn't necessarily refer to your employer's contribution as something that you will get at a later stage at retirement. So that's not really how our benefit plan works. So thank you. So I'm just going to publish that question and refer you to looking at how the defined benefit plan works. Then there's a question about taxation and rolling over a withdrawal settlement to a UK bank account. And I don't know if you want to refer to that information, Christine, on the website about rolling over to a withdrawal
IRA?
settlement to an,
Sure.
Then we had another question also, just to, sorry to interrupt, but about La Mutuelle, which is here in Geneva. And people might have a mortgage or a loan with them. And just to clarify, we don't pay your pension to a provider like that to pay back your loan. There would only be some agreement that you would have signed when we pay you that it would go to that party through your account. but we pay you. We pay into your account, and it has to be an account with your name on it. But yeah, if you would just please show where people could find the information about a withdrawal settlement paid. There was an additional question about its taxation obligations, which unfortunately we don't have the expertise to advise about that.
Sorry, it's very slow.
That's okay.
The website. So sorry, just about the
Maybe
IRA
just go
rollover.
Okay. Mm-hmm.
So here under benefit options, always this page. So if you're under for clients, you could either go to separating or retiring or to all topics, and then you select the page benefit options. If you scroll down, you have information rolling over into an IRA account, and here it is explained what you need to do and how to complete your payment instructions. So I hope that will be helpful for the person who asked about that. Sorry, did you ask a different question, or was that the one?
Well, I think their question was related to the UK, but this is as close as I could get at just to say that we wouldn't know any other mechanism for them to avoid taxation of the payment of their withdrawal settlement. And so now, since it is time, would you like to explain where the town hall information is?
Yes, absolutely. So first of all, I know we answered, I don't know, 60, not quite 60 questions, and tried to answer as many as possible. There are still a few that probably you feel you didn't get a full answer, and we will keep this town hall going after we close, basically, so that we can publish a few more questions, or rather answer a few more questions after we have finished this presentation. So if your questions are not published or still outstanding and weren't addressed verbally or in writing so far, we'll try and answer them, and hopefully you get your answer. If you did not receive a reply, please, again, let me remind you, if you need to contact us, please go to this tab here, Contact Us, and then you have the options of writing to us via the contact form, calling us. Our call center, our contact center works 24 hours from Monday to Friday. We do currently have a slight increase on wait time online or in the telephone line, because we have MFA related support needs from clients. Usually they respond with literally 30 seconds max, but it might be a slight bit longer these days. So if you call us, please allow for a few minutes before someone takes your call. We hope that this will be only a few more days, and then we are back to our regular response time. But definitely calls are answered within, I would say, normally a few seconds if you call during the 24-hour Monday to Friday period. If you want to visit us in person in New York or Geneva, then please, here is the information under in person with the locations, the hours during which we receive walk-in clients and the days. Make sure to always check this before you come, just to make sure there is no special, I don't know, sometimes we have exceptional closures. It's rare, but if it happens, we don't want you to come and then be frustrated, of course. And then online, as we mentioned earlier, there is this contact form. Please use it if you need to send us written queries. We will respond as quickly as possible, and all queries are reviewed in depth by the relevant pension expert. So depending on what your question is, it will be routed to a team member that should be, of course, equipped to answer your questions. And then finally, just to remind you that if you needed information about any of the topics pertaining to separation or any of the others, here, if I go to resources, pension town hall sessions, you see this here. So here you can scroll and you'll see that it's organized by future events, where you have the link to join future sessions, today's session, and then the one next week for retirees and beneficiaries. And if you scroll, you'd see the special leave without pay session that we had in August. And I saw some questions around bridging for pension purposes, special leave without pay, and so on. If you're in the situation of considering a bridging, and especially leave without pay as part of a separation, definitely please watch this video. Go here, watch this recording, and or at least read through the presentation. It includes specific information about bridging for pension purposes in the context of agreed termination or in the context of termination. So again, resources, and then under resources, pension town hall sessions. And then we also have here under past events, separation-related town halls, French, English, depending on the dates, you can see, please check. We had sessions organized by how many years have you contributed to the fund at the time of separation, so that if you had less than 5 years, you didn't have to listen to all the information that might not be relevant to you, but more focused on that scenario versus those who have 5 or more years of contributory service and need more information. We are in the process of making this page more user-friendly, so it's easier to find what you're looking for. But for now, I would say, if you're interested in separation-relevant information, look here under these, which might be a session of interest to you, and watch it and look at the PowerPoint presentation. And then we have other sessions about the 2-track, or for participants, which is more focused on someone joining the fund and what needs to be known if you're in that scenario. So this is honestly, I think, a good resource if you feel that today we didn't get into the depths of all that you might be interested in, so that you can complete the information and maybe be more targeted on what you want to know much more about. All right, I think with that we will close. We are a few minutes over. I would just say big thank you to all of you who've been here today, and I hope this was useful. I'm going to switch on my camera, hoping it will be a good enough connection, unlike earlier. And big thanks to my colleagues, to Denise for moderating and explaining, to Sarah for explaining, and of course to also my colleague Regina from the comms team, who is doing the support for these sessions, and my colleagues in OICT for making it happen and possible. And with that, thank you for your long attendance and for all your questions. And we will do this again in English in the next year, and also probably in French. And next week, we will have a Q&A for our retirees and beneficiaries. Thank you so much.
Thank you, everyone. I hope it was helpful.